Welcome back. This is Dan Weston, channel name. It hasn't changed. It's going to stay this. So, anyways, I'm going to start. I think I told people about that. So I left a community post. I'm going to do a kind of step process check. I'm going to call it a checklist. So what I think you should do at different milestones in your life up to my age. So 20, 30, 40. You're going to have to wait for a 50-year-old checklist. I'm not there. So this is kind of like my idea of things that you should like what steps I guess maybe my version of what steps that you would take in life from 20 to 30, and then the next one will be 30 40, and then 40 to 50. So that's where I am. So just my opinion. I don't know how controversial some of this is, and you're more than welcome to start your own YouTube channel and put your own opinion out there. I can guarantee you I will not be telling you to put all your money in the stock market and have no emergency fund and go bankrupt and live off credit cards like a certain YouTuber would tell you to do. So I will not tell you to do that. This is not just about investing. This is the whole picture, not just about what stonks or what ETFs you pick. All right. So I'd like to go a little beyond that. Some of this is stuff I did. Some of this is stuff I wish I had done. So we'll see how this goes. And then maybe we'll refine the process because the 30 to 40, I think, is the most interesting one. That's your time to shine, I think, financially. So we'll get this started. Banking. Dun, dun, dun. I don't think a lot of people that are 20, early 20s think about banking in general. You just go, right? I just went to HSBC because they had 3 ATMs at my bank. That was my first bank account. So I didn't think anything of it. I used them until they sold their business because of certain things they did. Yeah, we won't get into HSBC, the shenanigans. But so just some ideas from me. So this is like your step one. You're 20, right? 21, whatever. Let's not split hairs. So I would tell you, in my opinion, you should open accounts. I'm not going to specify what types of accounts. You should open accounts with 2 different financial institutions. So the angle we're going with, you could think of it as like an internet bank and a local bank, could be like a local regular bank, like a for-profit bank, just a community bank, or a credit union. So you're getting those. Or the other way you could look at this is a local bank and a national big bank like Bank of America. So that type of pairing. Now I would tell you to do this because there are advantages I learned, not at that age, but later on. There are advantages to both. For me, internet and local bank have different advantages and disadvantages for things that you'll need in the future. And the point is, you're trying to build these relationships with these banks. And that's what I would tell you that you probably don't know right now. But the relationships you build at a bank can be just as important or more important than the interest rates they pay you or the fees they do or don't pay you. Yet at your age, you don't think of that. You're like, oh, I'm going to go to this bank because they pay 4.1%. And then, oh, I'm going to switch this bank because they pay 4.15%. So obviously they're better. But I think you're missing the big picture with banks, especially with local banks. You join a local bank because of the relationships that they build with you. And if I could just, like, the way to basically phrase it is, you want a bank that won't say no to you. And I've had banks say no to me for things that I know I was capable of getting as far as loans. And it's like, why would you say no to me? I have the credit rating, I have the assets. So you're trying to build relationships so these banks in the future know who you are, especially the local. And they'll say yes, or they'll work with you if you need something in the future. And at 20, you wouldn't really understand that. But I would say, so find 2 banks that you want to do business with. I'm not going to say what accounts to have in what, but different types of banks. All right. Now we'll get in the next step is credit cards, but one last step here. If your bank, it'll probably be more the local bank. If you find a local bank or credit union, if they offer a line of credit, open it. It doesn't matter what the credit limit. If they offer you $200, $500, doesn't matter. Just open the line of credit that they offer you if you're eligible. And that's all right. Okay. Now, before I get into some other topics, I understand. So this is what we're dealing with. So I'm well aware, money's tight. Like, I made probably 30,000 a year in my 20s and 30s. I started with the government as a clerk. So I understand tough times, and yeah, you don't have a lot of money statistically at your age. You're not bringing home a lot. So, the dollar amounts I'm going to give you, you're going to have to work with what you got. All right. I understand that. So, but I can't speak for all of you. So I'm just putting out rough numbers. Um, so just briefly, the benefits of a credit union. If you don't have credit unions or you never dealt with them, personalized customer service. Technically, a credit union is owned by the customer. So you as a bank customer own the bank, right? So they should hopefully, can't speak for all of them, provide customized customer service. Like you actually mean something more than like JP Morgan Chase. You literally mean nothing to them. Unless you have like 10 million probably. And even then maybe you barely matter. Credit union, I don't know about the higher savings rates, maybe. I've noticed they do have, yes, lower fees. Yes, definitely. Lower loan rates. I've known credit unions and local banks have given me better rates on car loans and home equity lines of credit. So I agree with that. Community focus. Yes. You do have voting rights. I don't know if you really care about that. You have the same insurance as a national bank. It's not the FDIC. It's a different credit. It's called the National Credit Union Administration. Same coverage though. So, but then the other one I would tell you, so like I said, you could do a local like credit union with an internet bank or a major national bank, but mix it up, the two that you pick from. Internet banks. So we're talking like Ally. Not going to say that one there. There's a few options. Military, if you're in military, Navy, Federal, or USAA, excellent options for an internet bank. Internet banks will have the much better online experience. I can definitely agree with that. They have exceptional websites, very easy to use. They usually are lower fees as far as transfers that can benefit you. I agree with that. Flexibility with transactions. Yes, my internet bank doesn't charge me for wire transfer or for bank to bank transfers, any of that stuff. They don't charge for any sort of service I need from them. So they're very flexible. But the only reason I wouldn't only have an internet bank, like say you have an absence of a physical location. There's times you might need a physical location to get a bank check, for instance. And those more personalized services, if you need to take out a large amount of money to buy something, internet banks would be tricky. You have to call them, and it's a pain in the butt. So you do most internet banks though will give you I don't know about the ATM thing because they have a network or they'll reimburse you for ATM fees. So they have different advantages, the three. So I would say pick two, depending on your area. So like I said, I have a local credit union and I have an internet bank. So like a combo of the two different types of banks I was talking about. Oh, that where to go? Okay. Okay, I covered this in another video. I'll link it in this, or I'll put it in the description. So this is my opinion. Do what you want with it. I would say you open 3 credit cards. Again, I don't care how much they offer you a credit line. Doesn't matter. $500, $1,000 starter credit line, whatever. Just this is what I would say. A general use credit card, which is what it sounds like. It would just be for those things you probably should be careful about spending a lot of money on. Going out to restaurants, going to Best Buy, and things you purchase there. Things you don't need for the things you want in life. You don't need, right? And it doesn't matter to me. Have fun with this. You can pick whatever card you want. You want a Disney card? Go for it. Number 2, I would tell you to get some version of this card. I know there's probably some other cards that have these type of benefits, but this is the benefits you want. An American Express Blue card. What you're looking for is the cash back on gas, groceries, retail, and a lot of these will also give you a higher cash back on your subscriptions to like your cell phone. No annual fee, and I know the interest rate looks scary, but the thing with this card, I repeat, you're not carrying a balance. You're only putting monthly subscriptions and monthly expenses that you have to purchase, gas, groceries, your utility bill, stuff like that. You pay it off every month and you're going to accrue points. Okay. And here's an example. This year, my card, this is what I've accrued on my version of an Amex Blue. It's an Amex. It's just not the blue. It's through a different bank. But I've accrued, the translation's roughly 1,000 points is $100 cash back. So you can see I've recouped hundreds of dollars. And this is, I've never carried a balance. It's just gas, groceries, my utility bill, and occasionally restaurants go on it, but it's basically things I have to, just every month they get put it on a card. And this, just it adds up over time. So that's something I would tell you. The third card would be a low interest. So there are credit cards that are low interest and they don't carry any benefits. That's why they're low interest. So it's like the lowest interest they can give you, but they don't carry points, or if maybe barely points. They don't give you any of those extra perks that you like on a credit card. So an example of that would be, where is it? So like here, this is a credit union, for example, Broadview Credit. So here's lowest credit or lowest rate, right? Look at that. Barely any points. There's no other perks. These cards have perks. This one has nothing. And you can see they're offering you the lowest interest rate. The reason you want this card is because it's for emergencies. It's going to sit there. It's just for an emergency. So that's all it sits for. You're still going to have a savings account. So, but still. So you have these three cards. If you want more than that, whatever. I'm telling you these three. And then every year, just pick maybe like on your birthday, every year, call them or go on their website and request an increase in your credit limit. You don't need more cards. 3 cards would be enough. And then just as your income grows, your credit rating gets better, they probably will naturally just give you more credit. Like I have a card that started at 2,000 and 15 years later, I'm up to about $30,000 credit line. And half the time I never even asked them. They up you. So you don't need more cards than this. You honestly don't. This will get you through everything you need to do. So that's what I would tell you. Start early, and then a big part of your credit score is the length of your accounts, not the total, the dollar amount and the length. So this will help you with your credit score. This might be the most controversial thing I say here. So I would challenge you, and I'm well aware, like I said, I know what the average income in this age range. I challenge you every year, at least commit $2,000 a year to saving. So it's only $170 a month, give or take. Now, here's the part you might not agree with. I would say put $1,000 in a savings or emergency account. I don't care what, call it either one. I don't have an emergency account. It's just my savings because I'm not concerned about losing my job. I'm a government worker. And then $1,000 increase in your checking account every year. So this, by the time you're 30, I would expect you to have 10,000 in a check and 10,000 in a savings. Okay. Now, what we're trying to do here, basically, I'm trying to get you to understand. I'm not saying you're a shopping addict, but understand, if you take all your money and it comes in your checking account, and you put it all away, all of it has to go somewhere, right? So you have to put all of it in your savings, in your retirement account, or your bills. You can't have money in your checking account just sit there. You kind of have the characteristics that are similar to someone that has an addiction with shopping. You're not that different than them. You have a problem with money just sitting in your account and it drives you crazy. So my concern is that you do have characteristics, even though you are doing great in life, like you're doing good things, but I would be concerned that you could have, spending addiction issues, that every dollar that comes in, you have to have a purpose for. Otherwise, you don't feel like you're doing all right. So what I'm encouraging you, so what I would encourage you is just have money build in your checking account that you just stare at, right? You don't have any use for it. It's just in your account. So you're going to have to deal with this your whole life. You're going to have money and you're staring at that money, and there's things you're going to want in life. And you have to have the friggin' fortitude not to buy them at that moment. That is the biggest, all this other stuff I'm teaching you. If you can't get past that part, and you need to have that fortitude of not spending money just because you have it available to you. Penny or money's got a hole, it burns a hole through your wallet. If you don't have that, if you can't control that in you, none of the other stuff I tell you will matter. That's the most important thing I can tell you. So yeah, I want stuff right now. There's things I want to go buy. I want to go buy a new OLED TV. I could buy it today. Easily with cash. I don't need credit or anything. I have enough money to buy that TV, but I'm not buying it. There's a time and place I'm going to buy it. This year I bought a kayak. So that was my big purchase this year. I'm going to plan out when maybe next year, unless I find something else. I plan out my major purchases based on my budget. So I would challenge you too. You're going to have to get used to that control inside you. If you don't build this control within you, you're just not, you're none of the other stuff I teach you is going to work. All right. If you have, because you won't be able to handle bad things that happen to you in emergencies. So I challenge you just to have money in your checking account. And you're going to tell me that you need it to work for you or whatever. But we're building that fortitude in you to have money and don't feel like you have to do something with it. All right. Now, I didn't say it was all of your money. It's half of what I'm telling you to save. Now, if you want to tell me that you're a penny pincher and it's not a problem, whatever. I'm speaking, the studies have shown the vast majority of people have a problem with just having money sit in their account and without spending it or doing something stupid with it. So this is more important to most of the people watching this, I would say, than not. Right. So I really don't want to debate this too much because you're going to tell me that it's not a problem for you. Fine. You're a gem. You're that rare person that nothing applies to. So good luck to you. So opening a retirement account. All right. So you start your job, whatever account, they all function the same. It's for different, these are for, private companies. 403Bs are for, I believe, teachers, or no, for government personnel. I think it is. Yeah. 401ks are for for-profit employers. 403Bs are for tax exempt nonprofits, and 457s are for government employees. They all function the same. All right. So you open it at your job, whatever match they offer you, meaning you put in a certain amount of money, they put in, they match it, right? They will tell you 2, 4, 6%. Whatever the match is, you do that immediately. All right. It's free money. It's compensation that you'd be silly not to take. It's compensation, and this reduces your taxes. So just get right. If they match 4, immediately 4%. All right. No more thought. So that's the next step. And then we'll get into the basics of things you could buy. So what I would tell you is, oh, here it is. You basically have more or less 2 options at your age. You don't know anything about the stock market. You just need to start. Okay, you're going to look, they're probably not going to know much about what you should invest in either at these companies. So what should you put your 401k in? I would tell you got basically 2 options. You should do a target date fund, or you should do a broadly diversified US market fund. Okay, that's your options. That's my opinion. So target date fund, you would find the date closest to when you retire, which you can retire at 67 with full benefits. So that's what I would tell you, the closest date. So here's one closest to me. All right. I don't have a lot of time to get into this, but target date funds basically will change as you get older. They will change these to become more conservative. So when you're young, when there's a longer time horizon in these target date funds, it'll be more equities. And as it starts getting closer to your retirement, they will start switching to less volatile assets, such as the ones down here, short-term treasuries and cash. They'll do like money market accounts. So these bottom ones will start getting a bigger proportion as you get closer. Your other option is just a broadly diversified ETF of the US, either the S&P 500 or the entire US market. So here's some options. Portfolio is, by portfolio meaning it's for retail investors. It's not for like commercial enterprises like SPY is, which gives you the lowest expense ratio possible. So, and then also they keep the share price down. So they will split the shares in order to keep the cost down. So that's why I like portfolio versions of S&P 500 products. So this is a great option for you. Now, do you need to diversify? More ETFs does not mean diversified. Okay, you can go target date fund, or you can do S&P 500. This, broadly speaking, it's not really a big deal which one you pick. Okay, you have your whole life ahead of you. That's up to you. So here's another version of it. This is a mutual fund version of the S&P 500, same low expense ratio. The difference between ETFs and mutual funds is structural. Has nothing to do with what they actually invest in. Okay. So you don't need anything else. Here's another option. Here is VTI, the Vanguard Total Stock Market ETF. It's every stock in the US, whereas the S&P 500 is just the 500 biggest companies, which represents give or take 80% of the US market. Either one, you don't need both. All right. Another version of the S&P 500 ETF. All right, just show you. It almost just as low expense ratio. So this is another one. Any one of these is just fine. You don't need multiple. One of these. So target date or a U.S. broadly diversified market. Take your pick. That's all you need. Just make that decision. And honestly, either way is fine. Just to show you here, if we compared VTI, which is the total US market, to VU, so 99.4% of VU is in VTI. You do not need both. You need one. You pick one of these, or you can do a target date fund that gets you to 67. You can change these when you get older, but you don't know anything right now. You're 20. So this is what I would tell you for your, honestly, this works for your 401k, and this works for what we're going to talk about next. So we're saying, all we've said, open this account, whatever match your employer, do that match. Now maybe this is controversial. I would then say focus on the investments in your Roth IRA first to max out your Roth IRA, because your Roth IRA gives you flexibility that I like. Like, you can pull out the contribution. It sucks to say this, but something bad happens to you in your life, you could pull out the contributions after 5 years after you open a Roth, tax-free, because you put them in their post-tax money. So you can pull it out after 5 years, and you can take that money back if something bad were to happen to you in your life and you needed assets. All right, and you wouldn't take a penalty. So that's why I would say this would be the preference. And this gives you more options for investments, which is kind of a smaller point. But this is your Roth IRA. It's not through your employer, so you don't have to worry about if you leave your employer, what's going to happen to your account. This will be with you your whole life. All right, $6,500 a year, which is a lot. I understand. $540 a month, that's a lot. But you could put your tax return in here. That's one thing I would tell you. You could take your annual tax return, because I remember I used to get $4,000. I'd get all my money back. You could put it all in your Roth. Maybe that's all you do for your 20s, is just commit to putting your tax refund in. And you know what? You're doing great. If you do that, I think you're doing great. Same advice as the 401k. You do a target date fund, or you do a S&P 500 or US broadly diversified market. Pick one. And you're not wrong for picking one or the other. They're both great options. They both will do well for you, but just pick one. You don't need both. I don't think you should use Robinhood for your Roth IRA. I'll tell you that. I don't think you should, because Robinhood, I've looked at their financials and their business. Robinhood's business is predicated on you trading. Okay. They want you to come in and they want you to open your phone, and every day they want you to look at your IRA, and they want to shoot confetti graphics at you, and they want you to trade, and they'll offer you incentives, and you don't want any of this. This is the most boring investment in your life, your Roth IRA. It should be at a old, boring institutional investment brokerage. All right. And you shouldn't even look at it on your phone. You buy one of those funds with what you got and you move on with your life, and you don't look at it. You don't need to look at it. All right. So we can get into what you could do with Robinhood in the next video at the 30-year checklist. But right now, I would highly recommend that you don't use Robinhood for your Roth IRA. Or, I mean, under the same token, probably not Webull or any of these phone app ones. I honestly wouldn't do any of them, but especially Robinhood. So that's my opinion as a boomer investor, if you want to call it that. So what was I showing? So here's some places you can get a Roth IRA opened. Charles Schwab, it's mine. Fidelity, great option. Interactive Brokers, great. Vanguard, great. Merrill Lynch, sure. I think those are all fine options. I don't know Betterment. So these are some big options. Go for it. Later on, we'll talk about speculation accounts if you want to in the 30-year-old checklist, but not now. Okay. This is the point in your life where you should start thinking about if you want to buy a house. Doesn't mean you have to buy a house. I'm not saying buy a house in your 20s. I'm saying think about it. I don't know where you live. I don't know if do you really want to buy a house? It's a big commitment. It's sweat equity. It's a lot to take on at your age, because statistically or historically speaking, you don't have a lot of income at this point in your life. You don't have a great credit history. So just start thinking about it. Where do you live? Look at tax rates in the area. Is there, because you got to figure out, some areas will have rapid tax growth, or school taxes are absurd. So you got to kind of figure out where you want to live in your city or town. So start planning that. What type of loan would you use to buy a house if you were a traditional bank loan, an FHA, a veteran's loan? What do you have available to you? And then look at the requirements. This would be a time if you need help with a down payment or expenses to move and get started. Is there family or friends that would be willing to help you? Broach the subject with them. My parents helped me with one of the down payments on one of my houses, and I paid them back. But I brought it up before we started the process that house. So just for context, my first house, I bought at 27. My wife and me debate whether we rushed it or not. Kind of. I kind of wish I'd waited maybe a few more years, just in my personal situation. Might have been better off. But it did all right. So now getting to the last step. So now, you've funded your Roth IRA as much as you can. You're matching your 401k at work. You've put away a few $1,000s in savings, and your checking account is building that fortitude that you won't spend all your money. You're building up that steel fortitude that you're not just going to go buy a PlayStation because you have the money, or go to Vegas because you have the money in the account. I believe in you. You can do it. So if you have any extra, additional savings, sure, put more money in your savings if you got anything beyond what we talked about. I don't want to get into student loans too much with this video. If you have student loans, you got to figure out how to make your payment. You could argue that's number one. That's part of your bills. I don't know what your bills are. But that's going to hang over your head forever. And you really should pay off your student loans. So you should have a plan. That's all I can really say about it, because I don't know. Some of you probably have a lot of it, some don't. But it would be a priority. It would be the first priority, figuring out paying your student loans off. Don't defer them if you don't have to. That interest will compound you like to death. And I've seen people where it's bad, my age, and they're still paying student loans. So, okay. And then, certificates of deposit at a bank. If you have extra money, that's an option possibly, especially with the interest rates they're offering right now. That might be something to look forward to. I don't think at this age you need to open a personal brokerage account. I really don't. That's one thing I did, and I don't think you need to, honestly. I think all the things we just talked about, putting your retirement savings in order, building up savings accounts, now you don't need to do it. I don't think. So all these steps are enough. On a car, here's what I would tell you. You don't need that expensive, beautiful car, that friggin' Subaru Impreza or whatever the kids want. You don't need it. You'll be fine, and no one cares what you drive. Nobody cares what you drive. You think everyone cares. They don't. Go get a Honda Accord or something. All right. Something that you can afford and live with the payment. And if you want to see the horror stories on cars, go to Caleb Hammer's financial audits. You want to see some friggin' disasters. I mean, their cars are such a problem for some of these people on there. So don't get in that situation. All right. But that's up to you. If you want to learn more about financing, investing, to maybe do some investments beyond what we're talking about, we will talk about that at the 30-year checklist, when we will start talking about possible individual investments beyond what we discussed in this. So hopefully this was worth your time. I tried to think of the most I could in 30 minutes. I can only do 30 minutes with the video editing I have right now. So leave a comment. Maybe I'll discuss something additional on a live stream if you have something more specific than this. But that's the best, I think. If you did 80% of what I talked about here, you will be ahead of 90% of people your age. I'm telling you, it's not that hard, and you can do it. So thank you for watching, and we'll see you next time.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. Everything I do so instinctive and so passionate. Every word I move so descriptive like an adjective. I got a vendetta against people who patented being negative when you should be getting after it.
I got facts over tracks, this and that. Spitting slow, spitting fast, I could roast, I could gas. Think I'm okay at last, but I don't know if that can erase all the past. And the pettiness, a reflection of the emptiness. Hilarious, you think you're worth my time, you're delirious. Mysterious, because you hide behind a fake exterior. Inferior, you know I'll always be a bit superior. Get off of me, this ain't no humble brag. I want you to hear words, you can say them back. I want you to feel free from the chains at last, and to believe in what you got, it was built to last, yeah.
Now that I've been put through hell, I never got anyone's help. I had to do it all myself.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement.
Gonna learn the consequence of being incompetent. Mental health is confidence, dreams into modestness. I'm not here to save the day, that's for you to take away. I could play a million mind games, but instead I say something not illogical, something that is topical. Rub it on and watch it go, make yourself unstoppable. Dreams are irresponsible, but they're always possible. If you just believe, you could be so remarkable.
Thoughts in my head, a collage and they spread. I'll be great one day, going off of my meds. No, I'm not giving up, no, I'm not giving in. I will make it to the top, taking off in the wind. I gotta make it, I'm saving every day to taste it. I'm patient, but my mind, it can hardly take it. I'm chasing a